Hello and welcome to today's ASX Investment Opportunities in Review webinar. Any individual reading or listening should discuss with their financial planner or advisor the merits of any recommendation offer presented in this material for their own specific circumstances and realise that not all investments are appropriate for every individual. Presenter today, myself, Leon Hine, Managing Director of Investor Signals. Up on screens, the performance of the ASX 50 model portfolio. Part of today's presentation is we'll look through the current holdings in the top 50 and the top 100 model and review our high conviction ideas. The technology that we'll be using today, we provide a subscription to the service. A 1 year access to it is $1,320. If you'd like to know more about that, please visit investorsignals.com, email Leon at investorsignals, or call 1300 614 002. Moving straight into a graph of the XJO up on screen here. The XJO's obviously had a sell-off from around 400 points back down to 5,900. Our base case has been that we consider this to be around where fair value is, and the market's likely to mainly move sideways. The market, if we think about it in the context that at around 5,900 points, the XJO is trading at about 14.5. At around this level, the market's trading at around 14.5 times earnings. And at that level, with the market on a 4.3% yield, we think that that represents about fair value. So whilst there's a lot of volatility in the market at the moment, we suspect that that calms down and the market mostly moves sideways. And the XJO is likely to settle into a consolidation range where probably, 3 to 4% further downside risk, and maybe on the upside back up to sort of 6,100. But I think we spend the most part of the next 3 months or so moving sideways. But within that consolidation, there's certainly value. So let's take a look at where we think those opportunities exist. And we'll start by toggling through the recent signals, and we'll look at the current holdings in the top 100 model and narrow that down to our high conviction ideas. So what we do is come into the watch list here, click on ASX recent signals, and we'll move through these fairly quickly. We select the first stock in the list, and some of these don't really sit sort of within the scope of stocks that we analyze for our model portfolios, and therefore some of these I'll skip over. But as you toggle through them yourself, you should reference where the current algorithm signal is, maybe look at shuffling a support line up underneath or at the more recent sort of low around that range to help establish where support is. So the ASX is a stock that we like. We think fair value somewhere between sort of $55 and sort of $60. That puts the stock on about a 3.5% dividend yield. The earnings are fairly defensive, so owning it at or near these levels, selling a covered call is our recommendation there on the ASX. Illumina, this one's just come onto my radar, so we've just I haven't added it to the notes for today's webinar, but around $2.50. We'll continue to review that in the weeks ahead. These are a couple of ETFs. They're short ETFs where essentially they're saying take profit on those, which maybe supports the view that the market's fairly close to support level. Now, Brambles is a stock that's in the notes that we'll review at the end of today. I like Brambles because of this upcoming spin-off. They're separating sort of their traditional timber pallet business away from their new sort of plastic pallet business, and that plastic pallet business will be spun off into its own separate entity, should help to unlock value for shareholders. Brambles seems to be turning around sort of the last 18 months of negative earnings, and we're seeing the early signs of about 3 to 4% EPS growth. The stock's back at 16 times earnings, so the price gap down here is to 10.07. I think anywhere sort of where it is at the moment, back down to around that $10 level, provides a good buying opportunity for Brambles, and that one certainly makes it onto our high conviction list. Credit Corp, just highlighting here, support around $18, but not something that's in our model. Challenger, so we've seen this sort of roll over, make lower lows, lower highs, and I suspect it runs into resistance again at around this $12 level. The real estate investment trusts have all rallied substantially over the last few days, which is, I think, really a consensus view that maybe whilst a month ago expectations were that there'd definitely be 4 more interest rate rises in the US, I think maybe the market's starting to recognise the slower global growth may temper the rate of those rate rises, and you're seeing where yield stocks were oversold, you're now seeing those bounce back, and that was something that I outlined in the notes, and we've had a look at a couple of those real estate investment trusts that we've been focused on. With Charter Hall, so I had a highlight there of the algo signal on the low. Centura not being there at the moment. So you'll see a number of these property trusts come up. So certainly a bullish structure there in Cromwell, but again not on our radar for our model. So another real estate investment trust there. It's rallied off the algo signal. CYB, so I've added this to the notes today. This is one that I've chatted about on prior recordings. So they've just merged with Virgin Money. I think it helps to unlock value. There are some risks around how the market perceives sort of the Brexit in the early part of the new year. But watch the momentum indicators. They're in oversold territory, and we're looking for that to maybe rally back up to sort of 550. This is the Dow Jones Global Real Estate Investment Fund. So we've had a buy signal at $20. That's pushing higher, and I think that's just a broad reflection of those trends that I've spoken about in the real estate investment trust sector. DEXA, same thing. A couple of ETFs. We've had quite a large number of ETFs triggered over the past week or two, so maybe something you can think of doing is going into the model portfolio and actually toggling through the ETF model portfolio. What we have here is the GDX running a resistance at around $28, so that's in the early stages, so we're not seeing as a shorting opportunity just yet. GEM or G8 Education, I share the view there, lower lows, lower highs. We've got an algorithm sell signal, and it appears that the business has some issues that they're not going to work through in the short term, so that sell signal might be one worth keeping an eye on. Goodman Group, we like this as a REIT, but it is expensive, so it's not our preference. I've highlighted previously that GPT and Centre Group have been our preference, and we'll get to those shortly. Growth Point, not in there at the moment. iShares Midcap, so under algorithm buy signals. So again, you'll cover those as you toggle through the ETF portfolio. Continuing there with a number of ETFs, same again. Now this one I'll pause and just chat about, the ILC. This gives you exposure to ASX top 20 stocks. Now it's mostly moved sideways for the last, say, 2 years, but at around $22 it looks to be finding support, and based on our view that the actual XJO moves sideways, I think you're probably looking at that ILC back on support within that consolidation channel. iShares Global 100 ETF, so it's under buy signals there, and these will show up in the ETF model when you run through them. Now Iris, so this is one that I think you can add to your watch list. So we saw a great earnings result from Iris. The stock made a higher high, higher low. It's selling off in line whenever there's weakness in broader equity indexes. Then Iris, being a service provider to the financial services industry, tends to fall in line, if not more leveraged to the actual index itself. But keep an eye on this. I think we're getting down to a level where it finds support. I haven't added it to our high conviction list, but it's certainly in our notes. We haven't added any long exposure ourselves to this, but we're just watching it to see a turning point, or maybe somewhere around that sort of 1050 to 1150 range. So we'll keep an eye on that and update you on the blog. Skipping through a large number of ETFs. So Mirvac Group, so not our preferred property trust, but just flagging there that it's under algorithm buy signals. So again, what we're looking at here is the algo signals from the last 7 days, and for the most part, there's only a handful of stocks within this group that have actually sort of made it onto our list, which I'll be covering today. So Van Eyck Vector's Australian Property ETF. Earlier we looked at the Global Dow Jones Property ETF, which was doing well off the back of the recent algo signal. This is specifically just Australian listed REITs, and we can see there similar type of pattern. We've had a buy signal at around that $20, pushing back up towards 21. I think interest rates the expectations of interest rate rises starts to flatten out, and that should bode well for defensive names, which includes the REITs. Net wealth not doing there at the moment. I'll skip through that. Beta share currency. So this one here, we'll stop and look at this Centre Group. So within the REIT sector, the two that I like, GPT and Centre Group, this stock's now trading on about a 6% dividend yield. I think it'll push back up to above $4 before it runs into resistance, and maybe look to sell a $4.25 call to enhance the return once it's up over $4. So you may wish to make note of that. This is the top 50. So we paused and looked at the ILC, which is exposure to the top 20. The SFY is the Spider 50 fund, so giving you index-based exposure to all top 50 companies. When we look at this, similar, gone sideways for the last 2 years. I consider it sort of back on support, and we think that the market consolidates and moves sideways. So whilst we don't see it as an opportunity to rally up and take out the high, you're getting about a 4.5% dividend yield and broad-based exposure to all top 50 stocks. Just skipping through. The STW is the ASX 200 fund, so exposure to all 200, so it's under algo buy signals at the moment. Super retail, so I think this one's likely to run into resistance, so I've just shuffled a resistance down there at 950. I think it sort of struggles. The shorter term momentum indicators are into overbought territory, and you might just keep an eye on that if you're running CFD accounts where you think about the short side of that with a stop back above 950. Southern Cross Media not doing there at the moment, and getting towards the end of these recent signals. Wesfarmers, so I updated this on the blog. My view here on Wesfarmers is that it's back at around about 4.5–5% dividend yield. We've got the upcoming vote for the spin-off of Coles, which, assuming it gets approved, we'll see that take place later next month. Fair value for Coles is around $46, or Wesfarmers, I should say, is around $46. Our strategy here is to wait for the spin-off to be finalised, look at buying both businesses and then selling tight covered calls over them. We think the opportunity is more to strip the income out through the call option and the dividend rather than actually any immediate capital growth in both of those businesses. Once the corporate strategies become more clear, we can then sort of reevaluate whether we think there's capital gains. But over the first sort of 3 to 6 months of post the Coles spin-off, we think both assets mainly move sideways, which lends itself to that covered call environment. And then we are back to the index. So not a lot of signals that sort of fall into our category of stocks that we're normally active in. So for the next part of today's opportunities in review, we're going to click on the model portfolio. We're going to go into the ASX 100. And we're going to focus on arranging this so the most recent signal, so we can see there this stock's been added to the model for 7 days, this has been in there 10 days, etc. So this is the way I like to initially look at the model, get the least number of days to the top, take notice of the names that have recently been added and have a think about sort of where the positioning of those are in my portfolio. So let's click on Brambles and we'll move through the list of out of 100 stocks, there's about 45 that are in the model at the moment. So Brambles has made it onto the notes, which we'll review at the end, but we think that's a buy at around $10 there. ALS, so higher high, higher low, support around $8. Goodman Group, support around $10. Can't do call options over it. trading on about a 3.2, 3.3% dividend yield. I think it's expensive for a REIT. Our preference is GPT and Centre Group. TPG Telecom, we've obviously got the takeover bid there from Vodafone. Macquarie Group, we've had a buy signal here at around 110. We haven't actually added this into client portfolios in an aggressive way yet. Whether we see a little more downside in the index and an opportunity to think about Macquarie at around probably 108 would start to come onto our radar. Sonic Healthcare, so we've seen this sell off from 27 back down to 23. The company's growing earnings maybe around 3 to 4%. The stock's on about a 4% dividend yield. Owning it at these levels and selling a tight covered call. We've seen the earnings growth rate in Sonic fall from about 7-8% back down to 3 to 4%, which probably doesn't create an environment where Sonic's likely to rally up and create a new high. So I think at best it just gets a little bit oversold through this sell-off. Maybe a rally back to $24.50, $25. Don't see it doing too much more than that. GPT, so this has rallied from 480 now pushing up towards 510. Owning it and selling 525 calls and turning that into a 10 or 12% cash flow makes sense. ResMed posted on this on the blog today. The ResMed's growing earnings about 10%. It's only on a 1.5% dividend yield. I think the concern here across these health sector names is they've just got very expensive from a PE ratio, and whilst the long-term fundamentals are attractive, I think they're in for a period of consolidation. So with ResMed, owning it and selling tight covered calls seems fine. We've had a couple of the banks come up onto the model portfolio as a result of recent algo signals. We don't see the banks rallying up and making new highs, but they are looking a little bit oversold and well supported by dividend yields at this point in time. Mirvac's in the model, so around 216 there is support. Dexus, Centre Group, so we like this name, pushes up just above $4 and then sell 425 calls. We think these yield sensitive names actually do a little bit better in a slight risk-off environment like we're seeing at the moment. So Vicinity, high or low there. Suncorp, this is one that we've added to the blog. We had a buy range at around $13.50. It's pushing back up. Maybe around $14.50 is full value for Suncorp. Cleanaway Waste, I think you can add this to your list. A lot of portfolio managers have recently added this into their holdings, and around $1.70 it looks to be reasonable support there for Cleanaway. Bendigo being added back into the model there at $10, just oversold. It's fallen 40% over the last year or so. Lendlease, so we've had a reasonable sell-off here from 22 down to 17, looking for it to find support. I've created a pretty wide band there on Lendlease, and I would be inclined to sort of think about this as a sort of staged accumulation, where if you're accumulating some shares here, you're leaving some capital available to continue to accumulate back down at $16 if we were to see a further leg down in US equity markets. Lendlease has a price gap down there to $16, just highlighting that. Horizon, this is a name that we've liked. I've highlighted it around $4 as a good buying opportunity. We think that this starts to make a higher high and a higher low. It'll probably take a long time to create a solid base, but into the middle of next year, we'd expect to see Horizon start to move into a period of sort of structural higher highs and higher lows again. Westpac being added to the model, oversold. Ansell, keep an eye on this. I think is it getting down to a point where it represents good value. So whether we see it a little bit deeper at 21.50, but watch these short-term momentum indicators. They're in oversold territory. The stock's corrected from 29 back down to 22.50, looking for it to find support at or near where it is at the moment. Flight Centre, coming down and testing this support line to around maybe $43, and we'd look for that to it appears a little bit early at the moment, but at around $43, a bit of price consolidation, and we may see that as a reasonable buying opportunity over the next month or two ahead. AGL just oversold down here. That was added to the notes. Looks like it could push up to around $20 and then sell covered calls over it. Woolworths is on support at around $27.50, but mostly moving sideways. Given that it's come from such a high PE, 24 times earnings, probably still trading at around 21, 22 times earnings. That's fairly expensive from a historical standpoint. So our view is there it moves sideways and you want to add covered calls to that. Seek, I think there's growth here. Maybe in the next 12 to 24 months, we'll see the company deliver sort of 10 to 20% earnings growth. So upcoming earnings results should be positive for it. And we think that at around this sort of $18, $19 level, it should provide good buying support. Newcrest, so within the gold names, we had these on our high conviction list. We've taken profit on Evolution. Newcrest pushing back up to around $20, trade sideways now around $20.50. So Evolution, here's where we've had the rally. This was one that was on the high conviction notes. We had the buy signals at around this 270 level, but just starting to take profit, and we're staying long Newcrest but taking profit in Evolution. Sydney Airports finding support here, but want to be selling covered calls. We don't see too much growth there in Sydney, but selling covered calls at around $7 and stripping out the December dividend there. Downer EDI, looking for this to find support. We can see the momentum indicators moving into oversold. I think Downer can deliver 10 to 12% EPS growth over the next couple of years. So I think we want to think about a buying opportunity as this comes back down to around $7. So I suggest you add that one to your watch list. South 32, it's in the model there, higher high, higher low. We've posted on the blog at around 350. Take another look at South 32, but not quite there at the moment. Healthscope's been disappointing. This is one that we were looking for it to find support at around $2. I'm not sure that there's anything company specific here. We've seen them sell off some of their assets in Asia, use that money to pay down debt. Whether it's the sell-off is really just driven by interest rates moving higher. The stock was on a fairly low yield of around 3.2%. So considering it's a relatively low growth business, as interest rates move higher, it can have a negative effect on Healthscope. So I think we've maybe just seen a little bit of a re-rating, but we'll continue to revisit this one in the weeks ahead, and I'll update some notes on the blog around that as well. CSR, all these property stocks are under pressure at the moment, as with James Hardie. So we're seeing some of the recent US housing data look a little bit weaker. That's weighed on James Hardie. Computershare, I spoke about this being expensive. I think there's actually material downside risks here in Computershare, so we're looking for it to maybe come back and retest that support of around $17. Santos has done very well, but not doing there at the moment. Tabcorp have their Investor Day tomorrow, so we're looking. Tabcorp has the potential to trade back up to around $5.50, at least $5 to $5.25. So it'll be interesting to see if we see anything sort of new out of the Investor Day tomorrow. Oil Search, so not really there at present. BlueScope. And these are all stocks that are in the model that have helped to deliver the returns. So the ASX 100 model's up about 10% year to date. The US 100's up around 20% year to date. So the US model's still outperforming. So I'll just continue to move through these, and then we'll bring the notes into screen and sort of have a look at what it is that we're really focusing on as the core opportunity. I think Crown at around, this sub $13, to me, that looks like it's good value. So maybe add that one to your watch list as well. And Charter Hall. Medibank, so I think add this to your list at around this sort of 270 level. It looks to be oversold. And AMP. Car sales, a little concerned that the growth is not going to materialize here. So our preference within these technology names is seek over car sales. Fortescue's actually holding up okay at the moment with the announcement of the share buyback. BHP, so we still like BHP, but using covered calls to enhance the return. Insurance Australia Group oversold at around $7, so we've added this one onto the list, and that's in the notes that we've discussed. Aurora, so this was the spin-off of Amcor, so at around 325 looks to be support there, but not really one we're doing too much in. And then there we are back to ASX. So let's bring the notes into screen. First of all, we'll just have a look at the calendar. So tomorrow we got the Brambles AGM, so I think that could deliver a little more clarity around the business strategy and support the share price. We've got the earnings result for CIMIC tomorrow. Now, CIMIC I like. At $46, I think that's good value. You might just be aware that there's a price gap in the chart down to 43, but the company's growing earnings 10-12% per annum, 3.5% dividend yield. I think that story looks okay. A strong flow of work in hand from infrastructure projects and mining projects that they're winning. Newcrest, so that an update there may help support the share price. Stockland's AGM, we're just sort of having a bit of a glance through. GPT, I don't think there's too much there that's likely to shift the price. We like that and selling covered calls. Qantas has a trading update on Thursday. Tabcorp's Investor Day on Thursday, so that may help the share price a little bit more clarity around synergy savings and future growth within the business. IAG AGM, so it's $7. I like that. ResMed's profit update, but I don't think there's enough there to shift the share price materially. URW, now this one's on the high conviction buy list at $13. This is Unibail Rodamco, which acquired the Westfield business. We've got a Q3 earnings release, and I think for the most part from now through the next 6 months, most of these trading updates and earning releases should help to support the share price. So it seems good value at $13. And next week, middle of next week, we've got Healthscope's AGM, so that'll be an interesting one to keep an eye on. Okay, now to bring into screen the notes, and let's just have a look at these. So in the US, I think keep this one on your watch list. This is Dow DuPont, the chemical company. Over the course of the next year or so, we see that company get split up into 3 separate businesses. I think that unlocks value for shareholders. Walmart, I like that. Intel sub $42 is a buy. We've had the recent buy signal on Microsoft, so that now is one that that gets added into the model. On the domestic market within Australia, let's go through these. Lendlease at around $17.50 looks to be oversold. Mindful that deep discount could be around $16, so stage your way into that position. Brambles at around $10 to $10.25 looks good value. We've got the AGM tomorrow, probably helps to provide clarity and a bit more upside. Healthscope looks oversold, but we're not seeing any sign of buyers stepping into that at the moment. Flight Centre maybe back down to around that $43 level support. So I'll just add some numbers to these as we go through. I think we'll just leave that, but Lendlease will say from $16 to $17.50. CSL, so we didn't really cover this today, but CSL's trading on still a high multiple, 30 plus times earnings, terrific sort of 10-15% earnings growth, but all those healthcare names are under pressure simply just because of we're going through a bit of a PE readjustment in the market at the moment. But keep an eye on CSL. We'll look at that next week and firm up the entry level. Car, they're not doing really anything there at the moment. I think there's still some question marks over growth. Seek, I think say $18.50. We'll put the price in there on that one. Aristocrat Leisure, I actually don't mind that. So we'll add, I think around, it has jumped a little bit from the original entry level, but $29, $1.70 there on Cleanaway. AGL was oversold, so we're looking for that to move up to around $20. And so maybe we'll just put the original sort of $19 and a target here of $20, and then you want to sell calls. GPT, I think the target there is sort of $5. Yeah, even where it is at the moment, 510, and then sell calls. This was one that we looked at last week, which is the Hack ETF, which is the cyber security ETF. So just maybe just bring up a chart of that, take a look at it. It's not very often. It's pulled back from its highs. So at around 625 looks reasonable value. IAG, I think that's a buy at around $7. And you may let that rally a little bit more before you look to sell covered calls. Iris, I think we had a price there of at around 11, roughly $11, and we'll revisit that next week. Macquarie, we're looking for that for a little bit lower, down to 108. Wesfarmers around 46, but we're really waiting and then selling calls post the split. BRG, I'll come back and have a look at the graph of that at the moment. CIMIC, we like that between really that support or the price gap in the chart back down to 43 to 46 looks like the buy range there. Downer EDI around $7. That's good buying. Tabcorp we like at the moment, so let's just put in where it is at the moment, 480, and we think that that could maybe trade back up to sort of 525. Crown sub $13, so let's just put $12.90, and that should be able to trade back up towards maybe as high as $14. Now on the watch list, so Woodside Petroleum, keep an eye on this for the next algorithm buy signal. IPL's under sell conditions at the moment and it's pulling back, but we'll keep an eye on an upcoming buy signal there. QBE's pushing up against resistance. It's obviously doing well as interest rates go a little bit higher, but we're going to wait for a pullback on that and the next buy signal. I think we could be waiting a while for QBE. Woodside and IPL are probably not too far away. If we have a look at the yield-sensitive names that we like, so Centre Group, I've covered that. Vicinity, I've covered that. MGR, not really my preference within the space. Sydney, we covered that today. Transurban's under sell conditions, but I think with interest rates backing off, you could start to see a little bit of buying interest there. Now, URW, so we looked at this. I think it's a buy at 13, and the upcoming earnings results should help to underpin that share price. Newcrest, we're continuing to hold that. Evolution, we've closed and taken profit. That rallied around 10%. So that was one from the high conviction list that's done very well. ASX, we're just starting to add this at the moment. I don't see it really rallying up and making a new high, so adding it and selling covered calls. Cleanaway, we've added that to the high conviction. CYB, we've added that at $5, and Medibank Private at around that 275s onto the high conviction. Now, I'll start to update these notes. We'll take some of the stocks from the general notes section and shift them down into our high conviction list, and I'll continue to update those on the blog. Thank you for listening in. Actually, sorry, just to finish off, I said I was going to cover BRG, so let's just bring up a chart of that. So what we're looking at here is Breville Group finding support at around this, say, 1170 level and maybe starting to move a little bit higher. A couple of graphs that we didn't get to cover, so let's have a look at CIMIC. This is the price gap that I was talking about in CIMIC, back down around 43.50. So just keep an eye on that. It's starting to break through that support that I had there, and we might actually just extend that out, and I think that becomes the focus now, is maybe weakness down to $44 thereabouts. But given the strength of the work in hand and the relatively good earnings growth profile, I'd be surprised if we don't see buyers step back into CIMIC sort of within this $46 to $44 range. So watch that one closely. And similar space there is Downer EDI. So as that moves down to sub $7, keep that one on your watch list as a potential opportunity. I'm just reviewing to see if there's anything there that we hadn't covered. On the short side of the market, the ones that we're looking at, and I'll just bring that into screen So if you recall from last week, these were the notes. We'd been on the short side of some of these over the last number of months. BOQ, I think we can say that that's closed out now. That's shifted to buy conditions. OZL, so Oz Minerals, still looks like it's making lower lows, lower highs, as does Iluka. I think Boral, it can be closed out. I think that sell-off's been pretty substantial, and that's now finished. Rio, the question there's always been the share buyback underpinning that, so we actually haven't done too much on the short side there in Rio. For the most part, we've just used that sell signal as a reason to close out the long exposure in Rio, but rather than turn it around and look at the short side, we haven't done that. News, just flagging that's under lower high, and I think Coca-Cola at $10, it looks to me that's likely to run into resistance at around that point. Thank you for listening in. When we send the replay out, we'll finalise today's notes and send them out. And if you have any questions, don't hesitate to email Leon at investorsignals.com. Thank you for listening.